Traders Corner is brought to you by IG.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, tonight is the night we have our half-year review, and it's not been a great year to date, and we will get into that. But before we do, maybe just a point on being in the market at the moment with all the gyrations taking place ahead of this vote or the referendum in the UK. You know, if we weren't having a review this evening, would you actually also be staying out of the market at the moment?
I tend to think I would be, because this Brexit vote that is going to happen on Thursday, this referendum, it's very much a binary outcome. In other words, they're either staying in the European Union or they're leaving. And I think that the stronger likelihood appears to be slightly in favor of the Remain camp. But it's really not a dead certainty at this stage. I mean, 2 weeks ago, a week and a half ago, the markets were all uppity about the fact that it looked as if the exit camp was leading in the polls. And now over the weekend, we suddenly had one poll that showed the Remain camp ahead, and the markets gained a lot of heart from that on Monday, yesterday. And we saw that the European markets up around about 3%. The pound has strengthened significantly. And now, today, the markets are sort of a little bit nervous again. Which way is it going to go? And it's really no certainty at this stage. So, as I said, the outcome is going to be binary. We'll know probably on Friday. If not Friday, then we'll find out finally on the weekend, and then we'll come in next Monday, and the market's going to react one way or the other. My sense is that if they vote to remain in the European Union, that is a favorable outcome for markets. But given the rally that we've seen, how much of that is already in the price, and are the markets sort of set up for a buy the rumor, sell the fact kind of scenario? I don't know. But if they vote to leave the European Union, then I think all hell will break loose once that news comes out. So I think it's very binary, and it's an extremely important decision this week.
Yeah. Okay, so that's the context for the markets. But as I said, we're going to have this half-year review, which we do every year of the show. And maybe start off with the goals that you set yourself at the beginning of the year, because how would you feel you've stacked up against them?
Yeah, I must say I'm not that pleased with the performance this year for the half year to date. It's been a very, very tough, very difficult year. I've mentioned on the show previously that the last time I found the market this difficult to trade was in 2011, when we had a relatively similar kind of year, where the first half of the year was quite range-bound, quite directionless. And if you look at a lot of our stocks on the JSE, they've gone sideways with no particular trend over the last 4 or 5 months or so, obviously with the exception of the resources. And if you've been in the resources, you've done well this year. But everything else hasn't really done very well. So it's been a tough year so far. And I think our stats will show that when we get up to it now. But as you mentioned, let's look at the goals that are set for 2016. I do this at the start of every year, and I'm a big believer that these 3 goals that are set each year are very basic goals. But if you can achieve these 3 goals, then you'll have a good trading account. You'll do well. So on the 12th of January, we set out these goals, and it's quite simple. And I have the same goals each year. I want to try and achieve a 65% win ratio on all my trades. So that means that out of every 3 trades that I make, I want 2 of them to be winners, and I'll accept that 1 is going to be a loser. In an ideal world, obviously, you want to get 100% of your trades right, but that just doesn't exist. And we're not
fantasists.
We're not fantasists. This is real life trading. So to get a 65% win rate is very good. If you can get that right on average as a trader, you'll be doing well. Then the second goal is to achieve a 1 to 3 risk reward ratio. So what that means is that for every 1 unit of risk that I assume, I then want to be making 3 times more than that on my winning trades. And then the final goal is just to be patient for the right opportunities to act and to trade on. And what I mean by that is we don't overtrade. We don't trade just for the sake of trading because we feel we need to be involved all the time. We actually wait for high probability trade setups, and we take them when we see them, and we're patient and wait for those opportunities to present themselves.
Okay, and now how have things worked out?
All right, so we'll come back and review ourselves against those 3 goals just now. But let's have a look at a couple of the statistics and a few graphs and histograms and things now. So we've had 24 weeks of the show this year so far. We've recorded 24 shows. During those 24 shows, we've only done 11 completed trades. So we certainly haven't been very active. One could argue perhaps I should have been a little bit more active. Maybe that would have helped. But nevertheless, we weren't that active. We've done 11 trades so far for the year to date. 7 of those have been winners, and 4 of those have been losers. So on the face of it, that looks fine. You can see that we're kind of more or less at our 65% win rate on those numbers. But you'll see from the next slide is that the winners have really not been very big, and that's been a big problem this year. Our return for the year to date for the 6 months up until this point is plus 7.7%. So we are positive, which is a good thing. We were actually in negative territory up until the middle of April. So it's really been a difficult year. Things have come right for us in the last 2 months or so, but still to be up 7.7% at the half year is way behind the kind of run rate that we've set for ourselves in previous years. I mean, in years past, we would have been up more than 20% for the year to date by this point in time. So up 7.7% is a long way behind what we've managed to typically achieve in the previous couple of years.
And the next slide, I mean, that's also going to be instrumental, which is your histogram, which we always pull up.
Yes, so the way this histogram works is it plots each of the trades that we've done this year. You can see each stock or instrument that we've traded named at the bottom there. And then over here, we've got the percentage gain or loss on the portfolio. So there we've got 0%. Obviously above that is a positive return on a trade, and below that is a negative return. Now the red bars on each of these data points here represents the amount of risk that I was willing to assume on each trade. Now we always talk about never risking more than 2% of our account on any single trade. That what I mean by that is we don't allow ourselves to ever lose more than 2% of our capital on a single trade. And all those red bars, you can see none of them exceed the 2% mark, which is good. Now, the green bars represent the result of each trade. So what you want in an ideal world is you want lots of tall green bars to the upside, because that implies that you've had good winning trades that have made you lots of money on your winning trades. And where you have incurred losses, you want a small, stubby little green bar to the downside, which means that you've kept your losses small. So that's all good and well. You can see, however, that we've only really had 2 trades that have done very well for us this year. One was on an Aussie 40 future, which we traded, and we made about 5.5% of capital on that trade. And then we also had a short position on Truworths a little while back, where we made about 4.5% of capital. So those 2 trades together account for a gain of about 10%. But then stacked against that, you've got a whole lot of other small little winners, which have about 1% or so, or even smaller in some cases. And then we've had a couple of losing trades. Most recently, we lost money on Investec, and we lost money on an Aussie 40 trade about 2 weeks ago as well. And then right at the start of the year, we came out of the blocks with a bit of a punch in the face, as it were, because we got this one Aussie 40 trade quite badly wrong. And I remember there was a big gap down below our stop loss on that particular trade. And that's why you can see that first trade of the year there, actually we lost a little bit more than what our risk assumption was on that trade. And that was because of the slippage that we incurred on that trade when the market gapped through our stop loss. So all in all, what it means is that our average losing trades have come in at an average of minus 1.9% for the losers, and our average winners have come in at plus 2.03%. So what it really means is that then our risk to reward ratio has only been about 1-to-1, or just a little bit better than 1-to-1, which is really not good enough. We need to be getting, as I indicated with my goals for the year, I want to try and get winners that are 3 times bigger than the losers. That's on average what we seek to achieve. We haven't done that this year. And as far as I'm concerned, this is a disappointing outcome, albeit that we've made money for the year to date. But those stats just are not great, unfortunately.
Yeah. And the thing is, I mean, if you look back, is there anything that you would change about any of the trades that you'd taken at the time that you took them? Or is it just a little bit hard to say?
I think there's, what's made this year difficult is that there's been no follow-through on a lot of things, where you identify a potential breakout, you think it's going to go one way and it doesn't. It sucks you in, and then the market turns around and heads the other direction. That's been quite common this year. I've also found often targets have not been reached. Our technical targets that we typically set for ourselves have not been achieved. I think looking back retrospectively, we should have been far more active in the resources space. We should have been playing in the gold shares. We should have been playing in the platinum shares and those sort of things, because that's where the big moves have come and that's where the money has been made. But remember that that's a big sectoral shift this year that's come about, which is very different to what we've seen in years past. In years past, it's all been about the industrial sector, and that's been the leading sector of the market. This year, all of a sudden, the tides have turned. Now the industrial area of the market's really lagged, and the resources have been where all the action is. And we probably should have been far more active in that area of the market.
I suppose, I mean, you know, if you're going to look for positives and you've got to, otherwise you just are going to talk yourself down. And psychology is really important when you trade. Capital preservation and risk management has been fairly good.
That's true. And as a trader, your number one priority always should be capital preservation, and your number two priority is then to try and make some money. And so from that point of view, I am happy that we've been very disciplined. I mean, you can see we haven't taken any big losses on this portfolio. All the losses have been relatively small. So from that perspective, the discipline's been good. The risk management has been good. It's really just been a problem of not managing to string some nice big winners together. That's kind of made the year quite disappointing for the year to date.
And Garth, how does it stack up against the performance of the All-Share Index?
Well, there you can see a graph of the All-Share Index and of the Traders Corner portfolio. So we start the year, remember, with 250,000 Rand in capital, and the blue line here indicates the Traders Corner portfolio, and the red line indicates the JSE All-Share Index. So look, the scale of the graph probably flatters the performance slightly. I mean, it looks phenomenal at the right-hand side over here. But the performance hasn't been phenomenal. I mean, we're up 7.7% for the year to date. We've got 269,000 Rand in the portfolio. If you had have put that 250,000 Rand into the All-Share Index, it would have been worth 259,000 Rand, only up just shy of 4% for the year to date. So you can see that we are outperforming the market, but not by a significant margin. And if you have a look, you can see right up until the middle of April, our portfolio was slightly actually underwater. Yeah. We only came into positive territory after the middle of April.
Yeah. So going back to that first slide then.
All right, so the first slide was the goals that we set out for this year. And first goal is to achieve a 65% win ratio on all the trades. Well, we've got 7 out of 11 trades right. So that implies that we've made 63% of them were winners. So I think that's close enough. I'll give myself a tick for that. However, on the next point, this is where we've really fallen badly short this year. We want to try and achieve a 1-to-3 risk-to-reward ratio on all our winning trades. And the fact that we've got an average loser of 1.9% and an average winner of 2.03% implies that our risk-to-reward ratio has generally been about 1-to-1, which is simply not good enough. And then the last point is to be patient for the right opportunities to act on. The fact that we've done 11 trades out of 24 weeks means we certainly haven't been forcing trades, so that's probably okay. If anything, as I suggested, maybe we needed to be a little bit more active in the first half so far.
And for the doubters out there, I mean, come on, let's talk ourselves up a bit. Let's show what the portfolio has done since the inception, which was in 2009.
Yeah, that's it. Well, I mean, I suppose we've got to fall back a little bit on history here and say that it's not all bad if you go back. These are we're now in the 7th year of Traders Corner, and you can see those are the performances that we've managed to achieve for the last couple of years. 2010 and 2011 were very, very difficult years, a lot like what we're seeing at the moment, and you can see the performance there was rather muted. Yeah. But 2012, 13, 14, and 15, we've had really, really top-class performances there.
Oh, you know, they say past performance, never a guarantee of future returns.
And this is clear evidence of that so far.
Garth, so we're kind of at half-time in the game. Sometimes I'm sure you feel like you might be substituted as a result of the performance that you've just produced.
Yeah, I mean, I liken this to Saturday's rugby match where the Springboks played against Ireland, and the first half looked terrible. Those that were at the game, I believe the team was booed off the pitch at half-time, which is it's not very nice.
No.
I know what that feels like at the moment. But then again, the Springboks came out very strong in the second half, and they delivered a match-winning performance in the second half. So it's now half-time for us. This is halfway through the year. We've still got the second half of the year to come. I hope that Business Day TV doesn't substitute me.
Well,
having said that, I mean, it was all the substitutes that made all the tries and put the points on the board in the second half of the game against Ireland. So
yeah, watch your back, Garth.
We'll certainly have to go into the change room, have a good team talk, and come back for the second half of the year and try and improve on this performance for the year to date.
Yeah, okay, well, you know, let's try and more than double it and at least get to maybe 20%.
That would be great.
Okay, Garth, we have to leave it there. Thanks as always for joining us. We'll be back, of course, next week with the new show for the second half of the match, as it were. And this has been Traders Corner. Garth McKenzie is, of course, founder and editor of Traders Corner.
Traders Corner is brought to you by IG.